We're halfway through the week. Hello and welcome to the program. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. The International Monetary Fund upgrades its 2017 growth forecast for Korea's economy as it expects a cyclical recovery led by exports to continue through the fourth quarter. We take a look at what changes have been taking place in global and domestic stock markets as we head toward the end of the year. These stories and more coming right up. But first, a 5.4 magnitude earthquake hit Korea's southeastern coastal city of Pohang at around 2:30. For more, let's connect to our Lee Ji-won on the phone. So Ji-won, can you tell us more about the earthquake?
Yoon, like you said, the 5.4 magnitude quake hit the northern region of Korea's southeastern city of Pohang. People say the tremor was strong enough to have books fall off the shelves and parts of buildings crack or fall apart. But no casualties have been reported yet, and nuclear power plants in Gyeongju and the surrounding areas are safe and unaffected by the quake. Korean Meteorological Administration says there were smaller quakes of magnitude of 2.2 and 2.6 just a few minutes prior to the big one. And after the 5.4 quake hit off the city, a total of 6 aftershocks were reported, ranging from magnitudes of 2.4 to 3.6. The tremor was even felt by residents in the capital, Seoul, which is more than 300 kilometers away. This is the second strongest quake to have ever hit Korea after the quake of magnitude 5.8 that hit Gyeongju south of Pohang last year. That's all for now, but I'll keep you posted with more updates in our later newscast. This has been Lee Ji-won for Business Daily.
The International Monetary Fund has revised up Korea's 2017 growth outlook to 3.2%, while holding next year's growth forecast unchanged at 3%. The IMF also recommends Seoul to maintain its current monetary policy. Our Kim Hyo-sun reports.
The International Monetary Fund has hiked its economic growth outlook for South Korea this year to 3.2%, up 0.2 percentage points from last month's forecast.
The momentum is very strong, especially in Q3. We felt that investment growth remained stronger than what we expected. Exports still perform well. And even if when you adjust for all these changes in work days and all that, still in the fourth quarter we expect this momentum to continue. So 3.2 is quite feasible.
The findings were released Tuesday after a team from the global body paid a 2-week visit to Seoul. The IMF team also forecast a 3% growth outlook for 2018, backed by growth in private consumption.
Next year we expect the growth rate to remain around 3%. Consumption is picking up, benefiting from the large minimum wage increase and from policies supporting employment and social spending.
However, noting that inflationary pressures are not strong and consumption growth could be stronger, the IMF recommended South Korea's central bank should maintain its accommodative monetary stance and expansionary fiscal policy. It added that it's urgent for Seoul to carry out labor market restructuring, including the creation of a stronger social safety net for the unemployed, while boosting workplace flexibility for regular employees. Kim Hyo-sun, Business Daily.
Thanks to record-high semiconductor demand, Korea's total trade volume this year is expected to top the $1 trillion mark for the first time in 3 years. Our Elliot Kim with more details.
After seeing its trade volume dip for the past few years, Korea is set to make a comeback into the $1 trillion trade club, thanks to record-setting exports of semiconductors and surging imports of oil and raw materials, often used in the production of those export items. Data released on Wednesday from the Ministry of Trade, Industry and Energy showed a rise in trade volume so far this year up until the third quarter. Exports jumped 18.5% on year to $430.2 billion, eclipsing the previous record of $425 billion in 2014. Imports also grew 20.1% to $354.9 billion. A trade volume of over $1 trillion is often seen as the benchmark that defines a country's status as a trade giant. Korea became a member of that exclusive club in 2011, but saw its trading volume lose traction in 2014, although it now looks to have returned. The on-year percentage gains in exports has increased with the passing of each quarter this year, going from 14.7% in Q1 to 16.7% in Q2 and 24% in Q3. Semiconductors have stolen the show all year long, soaring 53.9%, while petroleum products, steel, and machinery also showed strong growth of 32.7%, 24.7%, and 11% respectively. The ministry says the country's reliance on exports to China has gradually eased, and exports to emerging markets like Southeast Asia and India are growing. With total trade volume this year expected to grow 11%, pushing the nation back into the trillion-dollar trade club at $1.005 trillion, this economic rebound could be the real deal. Elliot Kim, Business Daily.
Korea continued to add more jobs in October compared to a year ago, thanks to an uptick in new positions in the construction and public administration sectors. However, when compared to the previous month, the number of new employment fell, which the government has blamed on the country's low birth rate. Our Kim Ji-yeon has more.
The number of people newly employed fell in October compared to the previous month, although it has increased on year. Statistics Korea says the country added 279,000 new jobs last month compared to a year ago, bringing the total number of people in work to over 26.8 million. The number of new jobs created fell slightly to the 200,000 range. It had been around the 300,000 range for most months recently, with the exception of August. The ministry says these jobs are being created on the back of increased employment in the construction and public administration sectors. The number of those employed in the services sector dropped. An official from the statistics agency points to low birth rates as the main culprit, saying that despite the slowdown in the number of new jobs, the employment rate in general has risen 0.2 percentage points on year to 61.3%. The youth jobless rate in October edged down slightly from a year earlier to 8.6%, the fifth consecutive month it saw an on-year decrease. The overall unemployment rate stood at 3.2%. The perceived youth unemployment rate, as felt by regular people, ticked up 0.6 percentage points on year, recording 21.7% last month. The figure is the highest since related data was first compiled in 2015. Kim Ji-yeon, Business Daily.
Korea's commercial banks have logged their best combined net profit in the third quarter since 2011. According to data from the Financial Supervisory Service, the country's banks logged a net profit of $10.06 billion in the July to September period, more than doubling from the same period last year. The financial regulator cited the growth to income gains from both interest and non-interest sources. Also, the completion of restructuring of the nation's shipping industry significantly shrunk their bad debt expenses by 5 trillion won, or roughly $4.5 billion. Loss-incurring automaker GM Korea has taken another blow as its export path to Europe looks to be shutting down. With European exports accounting for more than 30% of its total outbound shipments, the Korean arm of General Motors may need some major restructuring ahead. Our Eunice Kim reports.
In its own restructuring, General Motors earlier this year agreed to sell German auto brand Opel and UK brand Vauxhall to the French PSA Groupe. That sale will impact at least 2 of GM Korea's 4 factories that had been building Opel vehicles. Its Changwon plant was pushing out the Karl model and its Pohang plant the Mocha. At a briefing last week, Opel CEO said his company plans to move, quote, volumes from Korea to Europe to improve profitability by importing some 200,000 fewer cars by 2020. That realization is set to hit GM Korea hard. The company's export figures had already been dropping since 2013. Last year, it shipped out just 420,000 vehicles, 1/3 of which went to Europe. If and when the 140,000 Europe-bound vehicles disappear from their order sheets, GM Korea's Changwon and Pohang plants will most certainly face painful restructuring. Some of the factories have already been operating at below capacity. With GM's Europe pullout, the Kunsan plant, which produces the Cruze, had already shed some 1,000 temporary workers. The Pupyeong plant could see an entire shift disappear. Once again, talk of a GM withdrawal from Korea is back amid the company's consistent losses, amounting to hundreds of millions of dollars annually. It's projected to come to as high as $890 million this year. But pulling out of the country entirely won't be an easy nor desirable task. GM Korea employs some 30,000 workers at its 4 factories and works with some 3,000 subcontractors. Whatever restructuring lies ahead is likely to have a big ripple effect on the Korean economy at large. Eunice Kim, Business Daily.
And moving on to our coverage of the markets, we have our markets contributor, Jemmy Kim, joining us on the line. Hello, Jemmy.
Hello.
All right, so can you tell us how the markets performed on this Wednesday?
Right, South Korean shares started lower this morning, hit by weak finishes on Wall Street. And prices fell further in mid-afternoon on reports of an earthquake in areas southeast to Seoul. But towards closing, prices recovered a bit. And the main KOSPI index ended 0.33% lower at 2,518.25 points. And the tech-heavy KOSDAQ, however, showed stellar performance, and this index closed 1.53% higher at 768.03 points.
All right, can you tell us in detail, break down the market action for us now?
Certainly. Number one market cap, Samsung Electronics, tumbled 1.04%, weighing down on the main index. And other tech stocks were mixed, with SK Hynix ending 1.68% lower, while car battery maker Samsung SDI closed 1.64% higher. Telecom stocks ended mostly higher, with SK Telecom up 0.4% and KT rising 1.03%. Another market heavyweight, Hyundai Motor, finished up 0.62%.
Then what are some of the events lined up for the rest of the week?
Well, today there are speeches from the U.S. Fed and the ECB members, and these statements are scheduled throughout the week to be concluded by ECB head Draghi making a speech on Friday. Tomorrow, the UK releases October retail sales, while the EU will announce its consumer price index also for October. And on this same day, weekly initial jobless claims from the U.S. is also due. This is Jemmy Kim for Business Daily.
As we head toward the end of the year, things are looking a little different than usual in the domestic and global stock markets. To tell us more about this, global strategist Daniel Yu from Kiwoom Securities joining us in the studio today. Thank you for being here with us.
Thank you for having me.
All right, so the KOSPI, which has been hitting record high levels recently, seems to be slowing down a bit. A little different from what we expected to happen nearing the year's end. So? Why is this happening?
Right. Actually, that's also my dilemma at this point in time. Usually, towards the end of the year, most of the people invest into dividend plays because you have to have stocks before the end of the year in order to receive the dividend for Korean stocks. So November and December, the value stocks tends to go up with a high dividend yield. But right now, everybody's going after KOSDAQ. KOSDAQ has gone up significantly in the last 3 months. Actually, within the KOSDAQ, healthcare industry is going through the roof. So everybody is going after growth at this point in time in Korea. That's very unhealthy movement, I have to say. The reason why this is happening is because investors are only focusing on growth stocks due to some of the reasons such as like political reasons or short-term thema-driven type of investment strategy that's happening right now. If you look at Korea, economic growth rate has slowed down quite significantly. So therefore, the investors are very thirsty for growth stocks.
Okay, well, can you elaborate a little bit more on the latest upswing that we've seen in the tech-heavy KOSDAQ?
Right. If you look at KOSDAQ, there are 3 major industries that in the KOSDAQ. The number one is the healthcare. Number 2 is the IT small mid-cap companies. And number 3 is some of them are China plays.
Okay.
And if we look at that, everybody focusing on growth stocks. Also, we like IT cycle. It's a super cycle. And also, recently there has been some amendment between China and Korea with the SAD issues, right? So with that, everybody's focusing on these industries going to grow very fast. So that's why everybody's focusing on these industries. But we already recommended in August that we need to buy KOSDAQ very aggressively. The reason for that is because of the fundamental reasons. On Q second quarter, it is the earnings for KOSDAQ companies were up about 18%. So that is a very strong move, and therefore the KOSDAQ moving higher, it makes sense. Right now, it is overheated territories. We think that KOSDAQ might move further on the basis of the strong demand by local investors, but we think that this is not based on fundamentals.
Now, shifting our focus a little bit to the global markets, there are rising concerns that trouble in Saudi Arabia could impact global oil prices as well as the global economy as a whole. So what's your outlook on oil?
Yes, if we look at the oil price, we've been saying that below $40, it will go up further. We expect that it will go up to about $60 level per barrel. The reason for that was because of the strong economic growth that's happening in global economies. So rising demand of consumers, and that results into higher oil price. This is all good. But if the oil price moves up further from $60 to $70, $80, $90, $100, that is quite a problem because the cost of the producing products will become much higher, and it will create a higher inflation environment, which is not necessarily positive for equity markets. But we think that oil price will not exceed above $60 over the next couple of years. The reason for that is because even though there's a very strong demand, there's a ample supply from shale gas. So as long as the oil price remains above $50, $60 level, then the production increase from shale gas will drastically improve.
All right, so we're seeing some unexpected variables both in the global and domestic markets. So what are some of the factors that we should keep a close eye on as we head near the year's end?
Right. Near the year end, everybody's looking for what's going to happen to the Fed interest rate. In December, there is expected to be another 25 basis point increase. But it's not just that. I think that everybody will be looking for whether or not the Fed will increase the speed of the interest rate hike. That will be very important factors. The second factor that we need to look at is what's happening to the yield curve of the U.S. The short-term and long-term yield curve differences is declining quite rapidly. Right now, it is around 10 years minus 2 years government bond rate differential is around 72 basis points. It has come down from about 125 basis points about a year ago. So it is coming down. Lower the gap means that the lower net interest margin for the banks, the earnings potential will decline, and the lending speed could also decline, which means a negative for equity market. So we have to watch out how fast this gap will decline in the future.
All right. Thank you so much for your insight today.
Thank you.
President Moon Jae-in has completed his 8-day trip to Southeast Asia and has returned to Korea less than an hour ago. During his time in Indonesia, Vietnam, and the Philippines, Moon stated his plan to build closer ties with ASEAN countries, which has been labeled as the new Southern policy.
President Moon's tour to Southeast Asian countries is significant as it completed the rough draft of our administration's foreign affairs policy by establishing a foundation to create a future community with ASEAN member nations and expanding the nation's diplomatic horizon.
In addition to signing various MOUs and making pledges for economic cooperation with ASEAN, the Blue House said the trip was a success on many fronts. President Moon signaled the normalization of Korea-China ties through a summit with his Chinese counterpart Xi Jinping on the sidelines of the APEC forum. He also garnered international support in Seoul's efforts to bring Pyongyang to the negotiation table through peaceful means. Korea's Culture Minister Do Jong-hwan says no countries are reconsidering their participation in the 2018 Pyeongchang Winter Olympics. There had been worries that a handful of European countries could withdraw from the Games due to safety concerns regarding tensions on the Korean Peninsula. However, the minister explained that after visiting each of those countries, it was confirmed that none are considering such an option. He was also confident that North Korea would participate in the Games, although that decision could come at the very last minute. The South Korean government has allowed the shipment of bottled water from North Korea into the country for the first time in 7 years. This after a South Korean civic group requested 46,000 bottles of mineral water from North Korea for use in a religious event. A Chinese-Korean businessman brought them over from North Korea and donated them to the group. The Unification Ministry says it allowed the shipment to spur inter-Korean civilian exchanges, but it does not mean sanctions on the regime have been softened. The bottled water arrived last month and is awaiting customs clearance at a port in Incheon. Seoul government banned inter-Korean trade back in 2010 when North Korea torpedoed a South Korean warship, killing 46 sailors. Korea's exports to Vietnam grew in October for the 21st consecutive month, with the communist country being considered an important post-China market. Our Lee Ju-young has more.
In Vietnam, it's becoming quite common to see big consumer goods festivals like this one taking place. Hosted by the Korea Trade Investment Promotion Agency in cooperation with major retailer E-Mart, this fair in Ho Chi Minh City connected roughly 50 Korean retailers with 200 Vietnamese buyers with aims to boost trade and promote high-quality products.
Korean products are popular due to their high-quality, diverse design and safety.
With business sectors trying to reduce their dependence on China after the THAAD rout dealt a heavy blow on Korea's economy, Vietnam has now emerged as a so-called post-China region. In fact, the communist country is now Korea's third largest export destination, with outbound shipments having topped roughly $37 billion this year as of the end of October. This is up roughly 50% from a year ago. Large retailers like Lotte Mart are also trying to proactively help smaller businesses advance into the Vietnamese market by helping them expand their business networks and increase marketing capability.
We can help small businesses meet Vietnamese customers. By helping them, we can also figure out what products are popular and well received among local consumers.
The Ministry of Trade, Industry and Energy is also set on expanding cooperation channels between large companies and small and mid-sized businesses to support the local market development of Korean companies. Lee Ju-young, Business Daily.
A fresh report says the richest 1% now lays claim to more than half of the world's wealth. According to Credit Suisse, as of this year, the wealthiest individuals owned 50.1% of overall global wealth. This as total wealth has expanded by 6% over the past 12 months, marking the fastest pace of wealth creation in 5 years. Unsurprisingly, much of that new money went to the top of the global wealth pyramid. The fastest expanding wealth group was the ultra-wealthy, those with a net worth of $50 million or more. Their number increased fivefold since the year 2000. The U.S. and Japan led in the number of millionaires, while China was seen closing in at 5th place. And that does it for today. But we'll be back tomorrow with more of the day's top business stories, so don't forget to tune in then. Thanks for watching, and see you soon.